Okay, I am going to do a really quick review of today. I decided to do one because I didn't really do much today. I took one trade and that was it. So I had got enough energy. I wasn't over trading. I actually did decent and stayed disciplined. Anywho, on the daily chart for the S&P or ES, we just got this big red candle. As I said on my weekly review, if I had to bet, if I had to take a trade, I would go short. And my reasoning was because we couldn't hold over the 5 EMA on Thursday. We went above it and then we came back down. So I put this big red line as the previous low of the previous the low of the previous day. That's what that thick red line was for. And my hypothesis was that if we could get below here, maybe check on the 4-hour candle and see a close, because this is the daily, I probably can just go short. And that would have worked out, but I wasn't paying attention last night when it actually happened. So I didn't take that trade. I intended on taking a micro, but I completely forgot about it and didn't take it. But otherwise, as we were going down, I had marked up this candle's low point to maybe perhaps get some support. No, didn't get support there. Then I put this candle's low for support and it didn't get support there. It just kept going. And then finally, we started wicking up. And so this was the low of today, which I will put this red line here and try to see. We got to pull back and see if we can come back there. Because if we can come back there and get a close on a maybe 4-hour or 1-hour candle underneath that, then I may want to go short with a micro. Okay, so yeah, we're dropping as we're going to make a equal low. I don't know. Looking at this candle, it looks pretty bearish. We got below the 40 RSI. We never did make it to the 50, and today we got a little bit beneath the 40 RSI. So it's not looking extremely bullish right now. Let's go out onto the hour. All right, so yeah, this was last night. This was my red candle that I intended on getting in. If I saw a close, like this was a close under it on the hour, I wanted to see a retracement up, and then I would get in if we got back down to the low of that hour candle. And we're talking, this happened like 8, 9 o'clock, and I just was not watching. But if I had gotten a micro here, it would have been a really good trade and could have made some pretty decent money off of a micro. So I'm going to start looking at that a bit more and paying attention. Otherwise, the hour, this is another thing that I've added to my trading strategy or arsenal, is the opening trade or range. They call it the opening range. A lot of people sometimes will use a 3-minute opening range. If you're really a micro scalper, use 1-minute opening range. 30-minute opening range was really popular back in the day, and a lot of people still use that. So instead of the 30-minute, I'm using an hour open range. And what that means is that this is the first candle of the hour. So I marked the high and the low. And basically, the theory is that if we go lower than opening range, there's a possibility we can keep going lower for at least a while. Or if we go above the opening range, there's a possibility we can go higher for the rest of the day. So that's what these two blue lines are. Otherwise, this was the 7 o'clock candle. The trade I took this morning, we were looking bearish, obviously. The 5 EMA is under the red, the black line, which is the 5 EMA, is under the red line, which is the 20 EMA. And this was our 7 o'clock candle. We pulled up a little bit, got above the 5 EMA on the hour. And if my strategy, I was like, if we can get below this, I'm going to go short. And that's what I did. And for the rest of the day, I was just too chicken to jump back in. And obviously I could have, because we went down quite a bit. Because after this 1-hour candle closed, we got up just a tiny little bit. And if we showed signs we were going lower than this, I should have got in. Same thing with this candle. We closed here. We started heading up. and I could have got back in at the low of this candle. And the close of the low of this candle, let's see, what did we do? We really didn't get really far. What I like to see is a pull up after we close up, go up, and then come back down. I don't know what that looks like. And the theory is, you really should. I'm on the chicken side, so being this oversold, I didn't want to go short anymore. But usually, if you can probably stay in there, not all the time, until you see a double bottom or a higher low. If we make a higher low, then okay, it's probably the end, or if we get above the 50-day moving, the 50 bar moving average. But we just kept going lower. So just take a look at the 5-minute. Okay, this is our opening range. Let's see, what did I do? Okay, I got in, this was the low of that 7 o'clock candle, this right here. We went below it with this wick. We came back up, and I got back in. I didn't wait to get back under here. I just got back in when I felt we were close enough to the 5 EMA. And I took that for a scalp for 6 points. I risked 400 points. I risked 400 bucks. And I made, I'm sorry, not 400. I'm sorry. I risked 4 points for 6 points. So that was 1.5 RR. So I took that. And then, like I said, the rest of a lot of these I could have taken, especially this was the opening range that I marked out. I was willing to get in if we got back up to this opening range, and I was willing to get back in short if I saw a reversal pattern, but it didn't make it there. But I absolutely could have gotten in here, or I absolutely could have gotten in if we had broken this. If we broken this, I could have got in. And here, this would have been a really good one. If I didn't see it, I was busy at the time, but we actually hit the 20 EMA, and we almost got up to the 50 RSI, so which is a better RSI. And I could have gotten in after we closed below the 5 EMA and taken that short, but I wasn't watching at the time because I was just like, this thing is just going to keep falling and falling. But that would have been a good pullback to get in. But at the time, it was almost 12, and I'm usually done watching by 11. Less than I've lost. If I've lost, then I'll try to get my money back. But anyway, right here, you can see we got a double bottom. And after we got that double bottom, we got the 5-minute crossing. Sorry, the 5 EMA crossing over the 20 EMA, which was above it. So it was bullish. We got over the 50. And as a B setup, I could have got in long here. I'm trying to only take A setups, at least this week, because last week was a red week for me. I hadn't had a red week in a while, so I need to readjust. Yeah, so we just kept going down. There were opportunities if you're willing to sell an oversold market. I get kind of shaky when it comes to that. But yeah, there were plenty of opportunities just to continue going short on ES. Because we had got out of this opening range and we couldn't even make it back up to it right here. So that was definitely a sign that it's just going to keep going short. All right, now NQ, go through really quickly because I haven't been trading NQ. It's been too volatile as far as having your risk, what you have to risk. On the daily, it's pretty much the same as ES. We got lower than this low and this low, which is what I was looking at. We got lower than that. And it looks pretty much the same as ES. This candle on Thursday got above the 5 EMA, but we couldn't close above it, which led me to believe we're probably going to go down some more. And under this candle, it was a good probability for a short. And if you were trying to be more conservative, you could have waited until it got under this candle. Let's see. Let's look on an hour real quick. I don't have anything marked up because I didn't look at it. I'm really kind of focusing on ES and gold at the moment. But yeah, this was the 7 o'clock candle, the same as ES. Good opportunity to get in short. This was our opening range. This is our first candle of our candle formed of the day. We definitely got below that, and we kept going short. And basically, you just could have got in at any pullback that you felt comfortable getting in. Again, it's the same thing. This was actually okay, but on ES, I was really hoping we got to that opening range, which is probably somewhere around here. We didn't make it to it. I should have just went on ahead and got in once we got under the 5 EMA, but I didn't. And that would have been a really good trade, obviously. And this was the same trade on ES. We went back up to the 20 EMA, and we fell back down, and then we have like a double bottom form. So then you need to pretty much chill with the shorts. And we got over and closed over the 50 EMA. We had the 5 EMA cross above the 20 EMA, and then we could have taken a bit of a long if you wanted to go against the trend. And for me, I call that a B setup. But yeah, NQ is looking, or the NASDAQs look pretty much the same as the S&P or ES. Okay, now the gold. Gold was amazing. I did look at gold a little bit last night because gold moves a little bit better at night, but we just shot up, and I just said forget it because let's see, Thursday we went down a bit, almost to the 5 EMA, and then we popped back up. So I drew this green line saying, if we can get a close of the 4-hour candle or the 1-hour candle above this line, I would be willing to take a micro and go long. It happened so fast because what I like to see is I don't like to see it just go there and then jump in. I like to see that we went down lower, which we did because we opened. We opened right at where we closed pretty much. And still, if I was looking. Let's look, and I saw, let's go to the hour. All right, so this was Sunday. This was Sunday at 7 o'clock. We opened Sunday at 5 o'clock East. I'm sorry, 5 o'clock Central, which was this candle right here. That was this candle, which would have been good for me on the hour. I didn't take it. I watched, but again, it's just so overbought. I get kind of shaky when we're so overbought because I'm thinking, okay, but I should have been a little bit more, at least less hesitant to get in because we did have that nice pullback on Thursday, which was nice. So this was the 7 o'clock, I'm sorry, not 1700, which is 5 o'clock Central Time Standard. We went up to this, but then we had our pullback, which was nice. And I could have got in here, or I could have waited till we got this 1-hour close here and got in at the top of that 1 hour, top of that 1 hour candle. And that would have been a nice long. Because again, the theory is that if we are in a trend upward, we should continue to make higher highs. So if this was the previous high, we're hoping that we're gonna go even higher, and we did. I didn't take a gold trade at all because we just kept going up, and then by the time we opened, we did go up some more, but then we just kind of consolidated. Most of the action was after off hours while the New York market was closed. That's why I don't mind trading gold in off hours because you get quite a bit of movement. All right. So yeah, this was New York Open happened around this time. Let me look at the hour one more time. All right, yeah, I had my opening range here. This was the 8 o'clock, and we just pretty much stayed within it. So I didn't trade anything. And this was I could have taken this. This was our 7 o'clock candle. If we got above this, I could have taken that long, but I didn't. And it was because we were just so overbought. But obviously, I should have taken it because we went up some more. Went up here, and this was our opening range. These two blue lines. So that was the first hour of the session. And we pretty much stayed in it. We didn't leave it. We stayed in that opening range, which lets you know that we're just consolidating. It's not a great time to trade unless you're a range trader and you're going to long the low and short the high and long the low and short the high. If you're that kind of trader, this is great for you. But this lets me know we're not in a trend, we're ranging, which I'm not a great range trader. So I didn't trade anything in gold today because we stayed in a range. Like I said, there was one trade of the day because we didn't get into the range until like once market opened. There was a good trade I could have taken here. I could have taken this because we came back, hit previous resistance and came back up. And then I could have taken this one. But I was a little bit worried because, like I said, we were just overbought. But yeah, that's where we are with gold. I would need to see a nice, decent pullback on the hour or on the daily to the 5 EMA before I would get back in or consider getting back in long on gold. Crude, I didn't watch it all today, so it's not marked up. I marked up ES and gold because that's what I've been trading. But on the daily with crude, we mostly went down. We went up almost to the 20 on Thursday. But we mostly just went down. We had a little bit of a push upward. And we actually ended up closing above the 5 EMA, which is a positive sign that we want to be bullish. Who knows, who's going to win, the sellers or the buyers. Because we didn't stay below the 5 EMA. We went up and closed above the 5 EMA on the daily. All right, let's see. All right, so with crude, if I were trading an hour, we are bearish. We came up to the 5 EMA, and this was the 7 o'clock candle, I believe. Let me just check. Yeah, that's the 7 o'clock candle here. If we got below here on the 5 minute, that could have been a short since we're bearish on the hour. If we got below this, that would have been a short. And this candle would be your opening range. And you can see pretty much we stayed within the opening range until the very end. Let's look at the 5 minute. Okay, so this was most likely the 7 o'clock low. No, this was not 7 o'clock. When I say 7 o'clock candle, I mean it closed at 8. It started at 7, but it closed at 8. So this is pretty much the bottom of that 7 o'clock candle. And so you look for a short. If you look for a short on the crude, we closed below the 5 EMA here. We came back up and then we came back down. Could have actually gotten in below this candle and taken that. And then like once we got here, stop could have been bought, could have been taken to break even or put at break even if that's how you trade and see how far down we go. I typically just get out. If I would have probably just gotten out at the previous low. But at some point, maybe I'll have the courage to continue to hang on to it and just set my stop at break even. Outside of that, we just pretty much stayed in the range until around here. Then we popped out of the range. So once we popped out of that 1 hour opening range, then I could have considered looking at some longs on crude. Because looks like we're about to become bullish on the hour, and we had a close above the 50 bar moving average on the hour. So this was the hour range. We popped above it, closed above it with this candle. And that would have been a good opportunity to take a long, but I wasn't watching crude. So otherwise, that's it. Like I said, lately I've just been trading ES. I haven't been looking at NQ because it's been so volatile. And I like gold. And I haven't been watching the other. It's nice. It's good to just focus on 1 or 2 markets as opposed to a whole bunch of them, because I'll miss stuff when I try to watch a bunch. But I do like to look at NQ and gold and crude, because those are the top 4 that futures traders typically look at. And so, yeah, like I've added on a few other things that I'm looking at to, because I want to do more swing trades with micros. Not really swing trades, but longer hold trades that may go a day or half a day with micros. And so I've been back testing the daily to do that, as far as waiting for it to see if we can make a lower low and capitalize on that. And it worked both for both gold and ES today. I didn't take them, but they definitely worked really well. And the opening range on the hour is also a really good, I mean, you can use whichever time frame you want. I like the hour because I think it's popular, even though 30-minute is pretty popular too. It lets you know whether we're consolidating. I don't like to trade consolidation. And so if we're just stuck in that range, it tells me, look, we're consolidating. I mean, I look at the moving averages if we're as well. So if the moving averages are really tight together, then I know I need to chill out for a bit. But that's also another thing I can look at, is if we're not getting out of this 1 hour range, we're not trending at all. And I probably need to just sit on my hands and not do anything, at least with that market. But that's it today. We had a nice fall, and if you stayed in, you made a lot of money today. Oh, let's see. Yeah, I just made the $300. I had the 6 points on the ES trade early. It was like 5 minutes after the first candle closed. I got in and got that really quickly, and I was done for the day. And so that's it. Maybe tomorrow, I'm not sure. I have PT tomorrow, so I may and may not do a review. I probably won't. But then Wednesday maybe. All right, bye-bye.